When Google announced that they were laying off approximately 12,000 employees earlier this year, a lot of folks thought their fourth quarter results were going to be disastrous. As I look at their results, honestly, it wasn't great. And in this video, we're going to talk about Google's fourth quarter earnings results, what it means for the stock, what do I think about the valuation, where Google potentially goes from here. If you enjoy educational investment videos, please make a point of hitting that subscribe button, hit that thumbs up. You're watching Unrivaled Investing. My name is Daniel. Let's dive right in to understand their fourth quarter results. Once again, they weren't great, especially for a company where you expect greatness. You expect really solid numbers, like last year where you saw we're looking at something like 30-40% growth. This year, you're only looking at 1%, at least in 2022, 1% revenue growth in the fourth quarter. Now, that was hurt by a strong US dollar. If you adjust for currencies, their revenue growth in the fourth quarter would have been closer to 7%. Still, you're looking at profit margins declining significantly from 29% to 24%. And looking at their core, their underlying earnings per share, diluted earnings per share, dropping more than 30%. So not a super great quarter. You don't want to be looking at a business where their profitability is declining and revenue is sort of stalling out. What's going on here? You want to understand the different pieces here. Does this mean there's some sort of structural threat to Google? Well, when you pull apart that 1% revenue growth, the reality is there's a lot of different pieces. When you look at Google advertising, that's really where Google makes all of their money right now. It was actually much worse than that 1% revenue growth. You look at YouTube ads and their Google network helping other websites. That was really rough, reporting an 9% decline in revenue. Google search also suffered, down nearly 2% during the quarter. This is really tough to stomach because this is, once again, the cash cow for Google. So for them to be reporting a 4% drop in Google advertising is concerning. Now, does this mean they're losing market share? At least based on what management had to say, it really does sound like it's based on the macro, where effectively it's advertisers pulling back on spend. It's not necessarily about the return on investment that they're able to get. It's just that, hey, it's a tougher investment environment, so there's smaller ad budgets going around. And because Google's such a big player, they're feeling the pinch, they're feeling the pullback. And that's what you're seeing spread across their various different advertising platforms. One source of, growth for their business, however, was Google other revenues, which is lumped into including Google Play, so their Play Store for the Android operating system, their Android devices, their Pixel phones, for example, growing very quickly. Their Pixel 6s and 7s doing very well. I really like their strategy here. Their view is AI is going to be super duper important going forward. The truth is, as artificial intelligence becomes super critical and everyone goes, wow, I have effectively like a real life person in my pocket that I can talk to, we're getting there. And I think that'll happen over let's say the next 5 to 10 years, where you have this like super genius in your pocket that you can ask questions to and it'll be your like a real assistant. Their view is having an internet connection and a really great camera might be really all that you need. So that could disrupt Apple, in which case they want to be offering, the devices that really, have the great camera, have that super duper AI, and also has half the price or less of an iPhone, and it's still a very compelling smartphone. And so that's the reason why their devices strategy, in my opinion, makes a lot of sense. And they've so far succeeded with growing that. Still very, very small relative to the total market. They've also growing their subscriber base with things like YouTube membership and subscription and YouTube Music. But still looking at this business line, which consolidates these three different businesses, Play declined because of lower fees. You're looking at, a fairly small number, around $9 billion versus advertising closer to $60 billion. Still nice to see a little bit of growth. The core driver here is coming from Google Cloud, but Google Cloud is still significantly unprofitable. But that 32% growth plus Google other revenue is the main reason why they were up 1% during the quarter. So it is worth understanding. Now, once again, going through the segment basis, so Google Services, which includes all their advertising, that did see a significant drop in profitability, that 20% roughly drop. That is, you really don't like to see that. Google Cloud, they are improving their cost structure. I would expect to see in the upcoming quarters them reach break even or even profitability. So we'll see, if they're able to manage their costs efficiently during, 2023, 2024. Other bets continues to be sizable losses, to the tune of $1.5 billion roughly per quarter. And they also have corporate costs. So overall, looking at this, it's not great to see a 17% decline in profitability year over year. That is not the type of thing that causes investors to say, hey, I want to pay up for this business. That's the type of thing that causes investors to worry, hey, how bad could it get? And so that gets to a broader, commentary where Google stock over, let's say, the last 6 months to a year, you have seen a noticeable downtrend. I think these results were kind of ugly. They weren't great, certainly not great. And so I'm honestly a little surprised the stock's not down more, because reality is the stock rallied significantly today on Meta's mediocre results. And I talked about that in a separate video. And the loss after hours is only sort of retracing some of the gain that they achieved during the day. I don't view this as favorable enough results. And I think it is worth asking yourself, from a probabilities perspective, are these results enough to get Google into a positive uptrend? It's been in this downtrend. A lot of things are in the downtrend. Are these results favorable enough to get folks to say, hey, you're on an upswing? I don't think you're there yet. I think there's a lot of uncertainty that investors need to consider, but maybe there's sort of this hopium that's going around that, the economy is going to be great, and therefore Google's advertising business will start picking up again. And that's what I think you've seen with a lot of stocks, rallying recently. But I think the underlying actual fundamentals don't speak to that reality yet. We'll see what happens. I mean, prices sometimes lead fundamentals, but so far I'm a little skeptical of that rally that you've seen. Now, yes, I've been, pointing out some of the sort of the downside of their results in the fourth quarter. It is worth calling out several of the favorable aspects, like they do have irreplaceable assets like YouTube. They talk about the shorts business growing extremely well, extremely rapidly, 50 billion plus daily views, up from 30 billion daily views last spring. So, what they're doing with YouTube continues to resonate. Hey, I'm grateful that you're watching my YouTube channel. I mean, this is, even some of the best creators, you have Mr. Beast talking about it's an irreplaceable asset. So I view YouTube as a long-term value generator for Google, even if they're facing short-term macro challenges where advertisers are effectively pulling back on their budgets. So I view that as a shorter-term trend versus a longer-term, pressure or longer-term concern. I don't view this as a, hey, this is a structural problem. Another key aspect that gets me excited about Google is the fact that, they do own some of the most cutting-edge artificial intelligence technologies, investments. DeepMind had this Lambda breakthrough that supposedly is much better than what you've seen with OpenAI's ChatGPT. Google is going to be launching that in the coming weeks or months. We will see. This could be worldwide disruption just from having this type of, smart language model that you can talk to. Imagine if it's much better than, OpenAI's ChatGPT. One of the main pushbacks with OpenAI ChatGPT is that it's a very good con artist practically. Like, you can ask questions and it'll give you a definitive answer that might be very, very wrong. So having a Google product that you're like, oh, this meets Google standards, so I can click on the button and this statement that it says, I can actually trace it back to the reality that it's pointing me to, or the source that it's pointing to. That could be very valuable versus the current OpenAI approach. So we'll see. We'll see if this also disrupts Google's search business over time. That is a real uncertainty. And I think it is part of the reason why, when you think about their core business, it should get a lower multiple. Not saying, let's say, under 10 times, but I'm just saying a discount relative to where it's been. I'm talking about probably a teens to a 20-time multiple for their core, advertising businesses effectively. And so looking at Google, unlike a lot of businesses that, are hurt, or, looking at Facebook, for example, Facebook, their free cash flow, effectively got squeezed in one of the most recent quarters because they had all these, they had their meta bets. You look at Google, and even though they have a lot of other bets and a lot of moonshots, they're still generating tens of billions of dollars in free cash flow, even during the quarter, and the fourth quarter, and even during the year, close to $60 billion in free cash flow. And that's roughly the same amount of free cash flow year over year. That's what I like to see. And I like to see that they're buying back, using that free cash flow to buy back stock. It's not a huge, they're not moving the needle significantly, just a couple percent, around 3% share reduction, partly because the stock didn't get super duper cheap. It's not like it's trading at 10 times free cash flow, but it is lots of free cash flow. So the question is, what's that type of cash flow gusher worth? I mean, what's 60 billion in free cash flow that has this growth potential over time if the economy rebounds, plus 140 billion in investments, plus many unprofitable ventures like Google Cloud and Waymo? What are these things? Waymo's their autonomous driving segment. Plus they have a lot more that I'm not even talking about here. What is all of this worth? Well, first, I launched unrivaledinvesting.com with the goal of helping everyday savers become better investors. Subscribers receive investment insights, compelling ideas, and my personal real-time portfolio portfolio updates. We also have an active community on our exclusive Discord server available only for our annual subscribers. I also recently launched 2 new investment courses for enterprising investors that want to learn how to read financial statements and also how to think about valuing stock. That's one main area where a lot of investors got burned. In full disclosure, this is not financial advice. And I do own some stock in Google. And so let's think about Google in terms of the valuation, what's driving their results. It's interesting, looking at their search business, they talk about, Ruth Porat, the CFO, talked about how their cost per clicks were down 1%. Once again, that's the pullback with ad spend. And they talk about, well, there's a lot of different things that, impact that, not only ad budgets, but geographic mix, property mix, all sorts of different things. But the clicks were up 10%. Think about their Google search business. And that when you're saying, oh, people are clicking more Google buttons and, relevant advertisements, that means people are still engaged. And so that means this is still a very relevant product. So even if you have challenges like, pulling back on the ad spend, this is still a product. Google search is still something that's very, very relevant for folks. Now, the question is, does this get disrupted with language models, these, artificial intelligence, systems where you can ask questions and say, hey, help me with my homework, or what do you think of this? Can you summarize this? And so it is worth understanding that they're still growing their engagement on mobile devices and, but they're facing a challenging backdrop. So that is worth understanding. And part of the reason why I own Google, even though it's not a massive position, is just I'm very excited about their investments with artificial intelligence. I think if there's a company that will be able to pull off artificial general intelligence, effectively, that having that genius in your pocket that can just do mind-blowing things, I think that will happen over the next 5 to 10 years. And I think Google will be one of the pioneers that makes it happen. And seeing some of the things that they've done so far with, let's say, protein folding truly is mind-blowing. So I'm very excited. And part of it's just you only live once, so you might as well own things that make you a little excited. Hopefully it's grounded in fundamental analysis as well. And so this is where I get to the fundamental analysis part. And, this is my hypothetical valuation framework. Of course, stock price can go way higher, way lower. Currently, Google still has around $1.3 trillion market value. So that is a significant market value. I'm looking at their key parts, breaking it up into different parts, looking at Google services, thinking about their profit margins, assuming that they improve slightly from where they were, and assuming, like somewhere between 5 to 10% growth and somewhere between, a teens, nearly 20 times earnings multiple 5 years out. And so you're getting somewhere between 1.3 and $2 trillion in value. So that gets you really the bulk of their current market cap. So the question is, okay, so where does your upside come from? So maybe it comes from Google Cloud, but they still need to prove their profit margins. Maybe it comes from their other bets. Maybe it's a Waymo, and also comes from their cash. That they have cash and other investments, around $145 billion. So when you factor these different components in, plus the fact that they're returning, let's say, $60 billion plus to shareholders each year, so you're getting around a 3 to 4% yield, as they're buying back stock effectively to the tune of 3 to 4% a year. So looking at this, I'm thinking maybe you have 20% compounding over the next 5 years. Maybe you have closer to high single digits. It's appealing. It's not like crazy compelling where I want to go all in on it. And that's why it's a relatively small position for my portfolio. I personally would like to add more at a lower price. But I'm looking at this once again, and I've called this out over several months. And just because we haven't really seen it fully play out yet, doesn't mean it won't happen. And that's my concerns, that you could see, let's say, another leg down with economic activity, in which case you would see a lot of pressure on advertising businesses like Google, like Facebook, in which case you do get another leg down in the stock prices. So far, that's not really developing, though. So maybe that thesis is wrong, and maybe, that was the bottom. I personally am skeptical about that, but we will see. I mean, I look at the valuations and I think Google at this price is reasonably compelling. I think their results were not great. They clearly need to show that they're heading in a better direction. So the advertising market needs to improve if you're going to start having better results. I would be surprised if this downtrend has truly been broken with what I'd argue is still soft results. So we will see. I'm not seeing the green shoots from the last market cycle that caused investors to say, "Oh man, the economy it's going to be, this advertising market's going to be roaring hot in 2023, 2024." I'm not seeing that yet, partly because the monetary tightening is still ongoing. So I look at this and I say Google looks reasonably compelling, but it's not super deep compelling where I want to make it, let's say 20% of my portfolio or 5 or 10% of my portfolio. Not quite yet. Maybe that's a mistake. If you have a different opinion, I'd love to hear it. If you're, let's say 130% invested in Google, I'd absolutely love to hear, your thesis on it. But I do call out what I am personally buying to my subscribers at unrivaledinvesting.com. If this video has been helpful for you, please make a point of hitting that subscribe button. Thank you so much for watching Unrivaled Investing.